Hi, Cassandra. Welcome to the show. I'm curious about your thoughts on current IPO market after 2 years freeze.
Thanks, Eileen. My thought is that the IPO market is gradually opening, and we have seen healthy revival signs of companies that have come so far. And we see this across various sectors and various countries. As you know, my team and I are responsible for international capital markets at the New York Stock Exchange, which is really taking non-US companies to list here at the NYSE. We have already listed about 12 companies from international to NYSE. And in general, I think I'm excited about what's to come between now and year end.
Please share with us some data regarding NYSE's performances so far this year.
Sure. So for first half 2023, the New York Stock Exchange has really set the pace for IPO proceeds, and we raised over $6.7 billion in IPO proceeds, and we are involved in 8 out of the 10 largest transactions. For the deals that have come out this year, over 95% have priced within or above the price range. Additionally, they have all traded quite well. Over 80% of them have traded beyond the issue price on day one. So those are healthy signs.
The big names such as ARM and Instacart have gone public recently, but their valuation came in far below the expectation. Does that reflect a cautious outlook here on the Wall Street?
I think in general, the valuation expectation from 2020 and 2021 are probably unlikely to happen again. That was a very different market environment then. Now, given current market conditions, I think there has to be some kind of equilibrium in valuation between issuers and investor expectation. We saw tech companies finally come to market after 2 years, as you mentioned. Tech companies are really important in general for indicator of investor sentiment in IPO market. So it's good and positive to see tech companies come out.
Market challenges including the higher rates, the stubborn inflation, as well as the recession risk are still out there. Are those headwinds going to impact the market?
There seems to be a general market consensus that the US economy has averted a hard landing and is really showing signs of a softer landing. In general, when market conditions are more stable, that's when you're going to see, hopefully, the capital markets become a viable place for companies to come and raise capital. We thought that right now we're closer to the tail end of the Fed hike. And given what we have seen in the tech market, in the tech sector, as we talked about earlier, and the strong pipeline we're seeing at New York Stock Exchange for the next 12 months, I'm really optimistic that there should be more companies that will start to debut in the NYSE for their capital and liquidity and funding needs.
And AI is obviously a trending topic of the year. Do you see the IPO boom in AI field?
AI is definitely a topic that we are all watching closely. There are always very interesting development in that space. A lot of times we're really watching in general tech companies that are leveraging AI or not. And tech companies continue to be ones where we are hearing that they are starting to consider 2024 as a possible window of opportunity for them to come and be publicly traded at that time.
Could it be comparable to the year 2000?
We really don't know. Market conditions are different at every point in time. So I think in general, given what we are looking at with current market condition, I think the IPO market in 2024 should be much more robust than in 2022, for example.
And how will NYSE win those tech companies in new listings?
Sure. So the New York Stock Exchange has a lot of really strong value proposition. We are the largest stock exchange in the world. We have the deepest liquidity. We have 2,400 of global companies that are listed on our platform. It is a very, very strong global community. Of the 2,400, more than 500 are international companies. We really believe in engaging companies at the early on. And we wanted to let them understand the value proposition of what we can bring to the table, as well as being their trusted partner to help them navigate the pathway to a public capital markets in the US.
Let's talk about China market, which is the very crucial market. And also, I think it's like second largest market for NYSE.
That's right.
And what is your outlook for a Chinese company coming back?
Sure, it's a good question. I think a lot has to be, really dependent on the CSRC application and the CAC application process. These are both quite new. We have seen a small handful of companies that had filed and had gotten the approval from RC and CAC. That is a positive sign. Now we're waiting for the right market timing for those companies to come and list at the New York Stock Exchange. We are hopeful between now and year end, we should be able to see a couple of them coming here. And next year is the year of the dragon. So dragon is supposed to be an auspicious year.
Yeah.
We might see more Chinese companies come and celebrate here at the New York Stock Exchange to ring the bell here.
You and your team went to China at the beginning of this year.
Yes.
How was that a trip?
It was really interesting for me. We wanted to get a sense of investor sentiment as well as have conversation with our issuers. The conversation back then, just a few months ago, was really, really meaningful and constructive. The Chinese issuers we spoke with, as well as the investors we spoke with, do want to see the ability to come to the US market to tap into the deepest liquidity. For the investors, for example, it is really helpful for them to see that there are viable exit opportunities if they were to invest in a Chinese company. So the more IPOs we can see of successful Chinese companies, that are high quality, that are doing well in the public space, will only encourage additional other Chinese companies to come in the future, and for investors to continue to invest into that space of private company and then eventually listing at the US in the New York Stock Exchange.